Hey guys, Peter Harper, Managing Director and CEO of Ascena Advisors. For those of you who are not familiar with the business, we advise foreign family offices and individuals on US direct investment and mergers and acquisitions. This is the fourth video in our Grant or Trust series. Today I'm talking about Section 674, which is the power I like to call the trustee power. For those who are not familiar with these rules, there are a set of anti-avoidance rules introduced in the Internal Revenue Code which set about to subject to tax foreign assets held by foreign forms of trusts. Right? Within our client base, probably 80% of our clients own non-US assets through some form of foreign trust. That might be because of for asset protection reasons, or certain other countries use these as forms of operating entities, as investment entities. Very different from the way in which American taxpayers generally use trusts. So why is 674 an issue, or how can it be an issue? The provision basically sets out circumstances whereby a particular individual, whether it's a trustee or a protector, has the ability to alter the way in which income or corpus can be distributed to beneficiaries. And it sets up this framework around adverse versus non-adverse parties. Right? So in essence, if you have a trustee that is subordinate or subservient to the grantor, so someone who is effectively a patsy of the grantor, someone who's either employed by the grantor or acts on behalf of the grantor, then any allocations or determinations made by that individual will be ignored, and the income or capital will be automatically attributed to the grantor. Right? Within the provision, there are a number of different exceptions that establish situations where the structure of the trustee will not automatically result in the trust being a grantor to the grantor, a grant or trust to the person that set up the trust. Those are when there is a genuine independent trustee that's been appointed, and where an adverse party, right, needs to be asked when a determination is made. Right? So this provision covers off on these concepts: subservient, subordinate, right, to determine, okay, is the trustee basically doing the grantor's bidding? But then they say even if there might be someone in there in that role, if that person still requires the approval as far as determinations from someone who is considered to be adverse to the grantor, then you can still have a situation where you won't have attribution. In our experience, the only people that will be adverse when compared to the grantor will be beneficiaries that also have an interest. Right? So an example would be if you had another person that was also a discretionary beneficiary of the trust that had the ability to receive income and distribution in an equal fashion as the grantor, and that before the trustee could make a determination as to who received distributions, they had to seek the consent of that particular beneficiary. Then, provided they weren't subservient or subordinate to the grantor, then that trust would not be a grant or trust. So it's a massive topic. One of the simple areas that I think a lot of folks slip up on. They think, okay, independent trustee, that's enough to get a trust out of the grant or trust rules. It's not. The provisions require very thorough analysis, and if you want to understand how this particular provision could impact your foreign trust, please reach out. Chill.